All right, let's get started, folks. It is Monday, April 14th, 2025. Income Navigator, some live trading today. Let's get some things going on the session today. So we got a couple things we're going to cover today. Question was in Discord about gold 112 campaigning. Take a look at that and how it can work, maybe not work, why it might be a good or not a good idea to jump into. We'll talk about SPY versus ES when it comes to 112s. We'll take a quick look at that as well today. Then we're going to get some trades on. So we've already gotten some trades in earlier on the session. Markets up, but not up as much as it was. That's a good time to get in. We actually opened three new trades in the Lazy Trader account today. We've opened two new trades in the small account. We're going to cover those today, and then we're going to get on at least one, maybe two new trades in the main trading account. So lots going on today. Let's get into it and we'll discuss it. You guys have questions, you can always pop in chat. I'll be happy to try to answer those as we go. So happy to be back from vacation. Well, no one's happy to be back from vacation, but happy to be back with you guys live. So I thought we would do a Monday training today. Then we'll still stick to Tuesday and Thursday this week. So we'll try to get three in for the week. Let's take a look at the markets really quick because I want to spend a lot of time on some trades today and not as much looking through things. So let me get off video. You can maybe see a little bit better. All right, so here we go. Here today on the charts, taking a look at ES. If we're looking at the weekly, I mean, still in a pretty good downtrend. You can extend this downtrend line out. The longer term uptrend on the weekly, it's not easy to see here. See if I can pull it up on a different chart. Look at this one. Now, come on. All right. All right, if we take a look at ES here, no, don't need a sale on anything. Taking a look at ES here, if we go out to a weekly chart, okay, we can see the longer term uptrend on this thing. And again, you can go way, pretty decently out here. Longer term uptrend all the way back here from COVID hitting the previous lows here. So back from, stop telling me I want Easter sales. All right, so back here from these lows of March of 2020, we banged on them again here in October lows of 2022. And then we pretty much hit right on it again. Well, right here in October of 23, we hit the trend line again. And then we really just hit it last week as well. So I'm not saying that the bottom's in or whatever, but this is a pretty long-term trend line, and we've hit on it three times now, so that makes it a pretty valid trend line, in my opinion. Letting a few more people in. So again, I'm not calling the all clear on the weekly here, but this is a pretty good area. You've got RSI was oversold, starting to rise, MACD reversing. We're still in a squeeze to the downside, so it doesn't mean things are over and we can still get worse. There's things to be very cautious of out there, but I wanted to at least show you the longer term chart here where we continue to just hit off of this trend line. We didn't quite get to the 200, and you can, let's see, more people popping in. I'm just trying to keep up with people, but I like the move. It doesn't mean the lows are in. Anything can happen, but I think we can, again, continue to nibble our way into things. I don't think you need to go wholesale hog wild and go bonkers on things. So again, be smart and use the opportunity. So we've had a nice move up on the daily here. but we're still below the downtrend line on the S&P. So until we break that, okay, I'm still in the bearish mode. But you do have a bullish PSR. You got MACD rising, you got RSI rising, stochastic momentum rising. So you're no, the momentum is still up right now, and we're flirting with trying to hit the 21 EMA. But you can see back in here, I think I can. I guess I can draw. Uh, we'll just use the brush. Uh, but this is your death cross in here. So the death cross happened where the 50 broke the 200 on the weekly. Move these things out of the way. So that's something to keep an eye on right now. And you can see the 50 is getting further from the 200 by the day. Still, the death cross is telling you that we're below the 200. Things are not as great as they look to be. I would say any bounce here, which is definitely what we're getting, is I'm skeptical of. It's not the all clear, but I will start to nibble away at things. So anyway, I hope this makes sense. Yeah, well, can't get rid of it. Uh, as we move. All right, so there's the ES. If we're looking at oil down here, uh, putting in a decent little base on oil doesn't mean go get crazy. You're still in the downtrend. I mean, you had the death cross on this thing was so long ago that you can't even remember when it actually happened, but it happened all the way back here on August of 24. So we have been in this death cross territory now for not quite a year, 8 months, something like that. So and doesn't mean ES can't flip around, but you can stay in these modes for quite a while. So we're low here. I like it. We've got a 112 trade on in oil. I'm not going to add another one, but that trades up 10% in 7 days. So pretty happy with where we are here. And on our trade, we have the 43. If we look at these things, let's peek in a bit. The trap is 53 to 54. So you've got 54, to 53, and below is your trap. So anything under really 54 is the trap. And then anything above 54 is your tail on this thing. And we go all the way down to 43, but the tail on this thing, no risk to the upside. So as long as we stay above 54, and if we go, anywhere from 54 down to 43, I can't fit it all on here. Bingo. So something along these lines is our 112 trade. We'll keep an eye on it. But right now we are perfectly sitting in the tail. We could drop down into the trap, which is way down here. But we'll see. And that trap is below the lows that were established a week ago. So we'll see. But oil, right now, I would still consider oil a 112 trade opportunity in here. ES, would I be doing anything on ES? Well, I don't think a strangle is the worst thing, but with volatility here, I don't want to trade it right now. So volatility with VIX above 30 makes me pretty cautious of doing anything. So VIX, being that VIX is above 30, even though it is settling down, okay, and it is rolling over, we're still above 30. Until VIX gets into the 20s, I don't want to take on a ton of risk. All right. Hang on one second. But we're going to make some trades today. So we're going to get into a few things. But ES, I think a 112 trade, still not a bad opportunity in here. How can I get rid of this thing? Don't worry about it right now. Right. So I think not a bad opportunity in here for 112 potential trades if you think that maybe the bottom was in back in here as we bounce off this trend line. I still think we could roll over, see these lows again. We're giving up a lot of today's gains. We were up almost 80 some odd points on the day today, and we're up about 30 something. So good. Still, we're up. We're above the 5,300, which to me, this level, as long as we stay above it, I think that's in good shape. If we roll over, that'll be where concern comes in. All right, gold. Gold pulling back today. I want to see a little bit more of a pullback. So this was the perfect area right off of this trend line. You can see on the weekly, you have the primary trend line way back down here. You have a secondary trend line that we bounced off of last week. That was a perfect opportunity to swing trade or get into something on gold. We'll look at a 112 today, but they don't always set up great on gold. But on GC, I would be looking at something like a 112 or a Jade Lizard or something if we pull back into here that gives me I want something with no risk to the upside on gold. You could also consider like a naked put, but I would like to see more pullback, maybe to the 21 before I do that. So I'd like to get some more pullback on this. Maybe if we can break this 3195 level, 3200, and get into this range, then I think selling a naked put here on gold, not the worst thing, especially with gold volatility is pretty elevated. If we take a look at IV rank, the IVR on gold 73. So you're getting really, really good premium. I would just like a little bit more pullback, but it's not a bad trade opportunity on gold. Bonds, I'm staying away from bonds right now. I do not want to be in bonds. I don't trust bonds. I'm very worried about what's going on in the markets with bonds. I'm not saying bonds are going to collapse at all, but rates, excuse me, rates are up. Bond prices are down. I think you've got China and others potentially not dumping, but selling U.S. bonds, getting rid of their U.S. bonds. But I think what's worse than any other nation's dumping bonds would be them to stop buying bonds. So rates are up, trying to entice people to get in. Bonds is what could break. If we look at the 10-year note, we had spiked up on Friday all the way to about 460. We've backed off today. If we're looking at the 30-year, we were all the way up to almost 5, and we have backed off a bit, but we're off of our lows on the session today as, TLT's trying to find some bottoming in here. I know some people want to potentially, sell maybe the 80s or something like that, say sell naked puts on TLT. I'm staying out of bonds right now. I just think the bond market is something that could break, but we've got this pause on tariffs, which should give some certainty to the market. So now I think we just watch what bonds do and take our cues a little bit from the bond market. So I'm not going to put any trades on bonds. I think if you want to take some risk and want to define it, I think maybe like credit spreads in here on bonds would not be the worst trade. So if you want to try to participate on bonds at these lows, you're oversold a bit and starting to try to turn. I think if you sold something lower, I would consider like a put credit spread on bonds right now. So there's trade opportunities there. I do not want, even though small caps can lead if we don't go into a recession and we move higher, I don't really like small caps with the tariffs looming. I think small companies are going to get hit worse than the big companies. And you just saw, that Trump was exempting essentially chips and phones and computers and things like that. Well, that's going to help the Mag 7. That is not going to help small caps who are reliant on a lot of their goods coming in from overseas and a lot of their things that they need to coming from other countries. Tariffs could really hurt small caps. While they're bouncing here a little bit, I'd be very hesitant to even want to jump in on that. All right. That's enough on those things. Let's take a quick look at some stocks. Amazon, back to the trend line today. Every time we've hit this trend line in the last 5 weeks, 4 weeks, boom, failed, hit failed, close today, and failing again. It doesn't mean it's bad at all. I like Amazon. It's one of my favorites. I think there's no rush to get into Amazon right now. Google is breaking out of the trend. And let's clean up Google. It's a little too much on these charts. Okay. Geez, I'm going to get rid of a bunch of things just to make it a little bit cleaner for everybody to see what's going on in Google. It's not my favorite company, but the stock is performing better. It is trying to break that downtrend today. I think there's no reason to rush in. I think you give it a little bit of time. It's off of its highs of the session. As the market continues to give up its gains from the session, down up only 25 bucks on the day. Nvidia, same thing, right at the trend line today, tried to break it, hit the anchored VWAP. And here you can see, which is this white line from back here. This is the February 18th VWAP, anchored VWAP, I should say. Smacked it and then fell down, trying to break this trend line in here. Not doing the great job of it. I think there's just no reason to rush into Nvidia here either. Tesla, trying to come up, but again, the trend line continues. This is the main trend line that everything is under. Tesla failing at that today as well. Meta didn't quite make it back, but it's failed every time it's hit that trend line as well. Now, Microsoft, on the other hand, is breaking through. See if we can get this all in here. So Microsoft breaking through on this trend line that has had a monstrous day last week, fell back, but held the 21, bounced off the 21, and now even though it moved up to the 50 today, it's giving up, but it looks better. So Microsoft does look better than most anything else. It's just not my favorite stock right now. Apple, well, a lot of people are talking about Apple and the bounce and the move. You know what? It's still not breaking that trend line for me. And then not only, you can see here on the weekly, there's the main trend line. Okay. And then there's a secondary trend line. Well, we haven't broken the secondary trend line yet, and we're failing to get above the 21. I don't think I'd rush into Apple either here. Palantir, it don't care about anything. Palantir is just taking off. Now it's giving up some of its gains today, but it's still gapped up pretty nicely. So now we have a gap fill that we'll keep an eye on unless it gives up all of its gains. Markets are now up only 20 points on the session today. But it's above its 50. It's above its 21 breaking back above the 50. Palantir's doing okay. I think it's just so overvalued. We're in it with a naked put. It's fine. I don't know. I just have such a hard time getting into Palantir. All right, really quick. Costco, right back to the trend line today. Failing a little bit, but still holding up okay today. JP Morgan, back to the trend line today and failing a little bit at that. So everything hit the trend line today and is rolling over. And you're going to end up getting, on some of these things, if we close near the lows of the day or roll over, you're going to see a bunch of hanging man patterns. So you're going to see a lot of, not hanging man, but some shooting star patterns, maybe even some hanging man patterns, but some shooting star patterns here where we're going to finish with a higher wick up and then the body down below. So a bit of shooting star patterns. We'll see. Costco's already starting to set up that way. JP Morgan starting to set up that way. Hood, I like Hood. It did break out of this trend, which is one reason that I liked it, and I did get into Hood some trades today, and it's giving up some of its gains, but it looks better than many others overall. And off of its highs, I mean, Hood was down at one point, 54%. I mean, just a massive sell-off on Hood. It's still down 24% off of its highs. I think this is a really good deal on what I consider a really pretty good company. I don't like the trading platform for professional traders, but I think for retail traders, not a bad platform. And they're starting to get into banking and other services to cater to their core clientele. They know their clients really well. And I like Robinhood here. So I think I like it better than like a SoFi. I think it's going to end up being like a SoFi along with the brokerage. All right, so there you go. And then Mags, I know Igor's been touting this a bit. It's a way to a bit play uh, on it. So we'll take a look at doing something here. But if you look at the tough thing with Mags is if you feel that the S&P and which is almost the exact same looking chart. Okay. So here's the S&P, big dip, and then here's MAGS. Okay, very, very similar, looking charts. Had the H pattern, broke it. Now MAGS is maybe a little bit better than the S&P right now, but it moved up, failed today. I think I think there's just no reason to rush in. Now, I did add a MAGS trade today. Now, the one caveat with MAGS is if you're on Tasty, it is hard to borrow. So it's initially set to closing orders only. So if you want to sell covered calls, you will have to get approval from Tasty Trade to be able to sell covered calls against it if that is a strategy that you want. But it does give you something similar. It's not a super liquid item, but it is similar to the S&P. So it's a low cost way to get in. All right, I think that's enough. I want to take one more look at Bitcoin. Bitcoin broke that downtrend. Okay, so Bitcoin on the weekly here broke the downtrend last week, had a good day Thursday, gave back a little bit Friday, was up decent today, giving some of that back, but I like where Bitcoin is in here hanging out at 84. I think it's definitely making some improvements. All the internals look good on it. IBIT, pretty much, I don't know. Uh, we'll get out of this thing. Okay, IBIT back to the trend line as well here. Everything looks exactly the same, which is nice little rally off the lows. Now maybe rolling over. I think you got to watch volume here. And if you look at the volume, is it rising or falling on all of these names and things that we were just talking about on anything that bounced? I mean, look at the volume. It's falling. Google, falling. Nvidia, falling. Tesla, falling. Meta, falling. Do you get the point? Palantir is still falling, even though it's still moving higher. Costco, falling. ES, falling. Okay, which is the same as SPY or whatever. Falling. QQQs, falling. This is not a good setup, in my opinion. So I think you just got to be cautious out there. We're still going to be able to put some trades on, I think, but I think you got to be cautious that we're going to come back down and maybe retest these lows. I think that would be the goal is can we come back down and retest the lows and get a double bottom in, which would put us around that 4,900 again. Anyway, there's my quick takes. I don't know, it's not quick. It's 25 minutes of charting, which is more than I really wanted to get into. But the death cross has happened, so I think you got to watch what's going on in here. When anything has those death crosses, they can stay there for a while. All right, so let's get into our trade account. And let's take a look at some things that we want to do today and explain a few things. All right, let's get in. Here's our trading account. It's having a nice little day today, up a couple grand on the day. So like 2,500 bucks. So we'll take it. Here, oil down a bit on the session, but nice P&L move on the day. It was up a little bit more earlier. It's down a fraction now, but we're still up 3% in 7 days. I'm fine with where oil is. Nothing to do. I'm not adding any more trades there. Let's come back to ES in a minute. SPY, we have our 4 SPY leaps in here, and we have our covered calls on them. So this covered call, when we sold this, we took in $3,000 worth of extrinsic, essentially. It's down to 5,500 or 20. I'm sorry, 2,500 extrinsic. So $500 of extrinsic has come out of this thing so far, but we have a long way to go. But I'm hoping to make this 3 grand this week out of it. So we'll keep an eye on that. But overall, a good day today. You've got vol down. So with VIX dropping 10% to 33, that's helping the calls that we sold, and that's also with the move up, it's helping the long leaps. So even though vol is going to impact these slightly, it's going to impact the volatility of the covered calls more because they're short, much more shorter dated. There's only 3 days left in this. Don't forget, Friday of this week is Good Friday. All right. So I think we've covered charts, we've covered SPY, nothing to do here on SPY. Now, I would like to also add the Qs on this. So we might add a poor man's covered call on QQQ in here, but we'll leave it alone for a few minutes here as we take a look at a few other things. All right, now, ratio hedges are up a bit today, down overall, but they're fine. I'm not doing anything until we get to 90% on the shorts, and we're not anywhere near. All right, so here's a question that we want to look. Now, we're well off of our highs for the day, and this thing was up over 70%, but this is the naked put that we sold on a 112 just last Monday. Now, we're at 65% gain. And we were actually able to sell this for way more than we normally would. And we can take $3,200 out of this today in 7 days, as opposed to waiting, a month for this thing to get to 90%? Maybe 45 days for this to get to 90%. I'm at 64% in 7 days. So I think we're going to take this off and we're going to close it. We'll work the order, but now we're only down 16, up 16. So there we go. We're out. All right, so we're going to book the profit on that thing. There was just no reason to wait. We made $3,600 in 7 days, so fantastic return. So now that takes us out. We have no naked puts left. We just have put debit spreads, okay, and some ratio hedges. And these ratio hedges are fine. There's nothing to do with any of these at this time. So we just leave those alone. But we're giving up the ghost today. ES is moving down. This may not be a bad time to look at. Even though I would normally wait 2 weeks, I just closed one. I could probably put on another ES112 trade today. VIX is still decent at 34. I see no reason to not replace it. But before we do that, let's take a look at what DTE do I intend to roll the leap calls. Are you talking about the short covered calls? Oh, you're talking about the leap calls. What DTE will I roll the long calls? As soon as we get to around 45 days, that's when uh, theta decay is going to pick up. I will most likely close out the leaps at 45 days left and reestablish out another year or more on poor man covered calls. If that's what you're asking, I'm not 100% sure, but uh, otherwise I won't close these things unless they generate like a massive, gain on them, and then all of a sudden we're up like 100% or 200%, then I'll consider closing them and reestablishing and just taking the win um, on these. All right, hopefully that makes sense and answers that question. So uh, the let's look at SPY versus ES for a calendarized 112. It's also possible here that since I just put this put debit spread on 7 days ago, and I just closed the naked puts that were with it, I think if I just put naked puts back on today, I don't think I would put a new PDS on with them today. I think I might just add the naked puts only, and we'll leave things the way they are. Um, because I've already got these two put debit spreads and some other things in here. I could put another one on. We'll see. Let's take a look at it, but it's left over and it might actually pay off. So we're going to go out 60 days. If we were going to sell the naked puts, we'll start around 4,000, which is around the 5 delta. They're paying 20 some bucks, which is pretty nice. So we're going to take in some nice cash with those, and then we can go out. Well, let's go out and let's look at the 150 DTE, and let's do the 137s. And this is where we were before. And I want to spend about $8 for 100 wide. So it's like $10. $8 for about 100 wide. We can go a little bit more than 8. I think we'll do that. Let's go around $10 since we're going to get more because of yeah. Let's do this 4,400. We'll do the 100 wide here. We're going to do 2. And then we're going to go back to the 60-day. And we're going to sell this one. Okay. And that's going to be a decent amount. We're going to take in almost over $1,000 on that. So that's going to be perfect on this. So let's take a quick look at and analyze this particular trade. Does it make sense? Does it fit everything that we're looking to do in here? I'm not getting a lot of extrinsic on it. Oh, I completely did it backwards. So this guy should have yelled at me. Okay. I don't know why I did a 122 instead of a 221, but okay. So here we go on this. So now we're back. You can see we're getting a pretty nice credit on this thing for what we have. Now, I'm ignoring this buying power. Like I said, because you have hedges and other things on, a lot of times I will look at this in a different account, okay, to ignore what my hedges are, how my hedges are influencing this particular trade. All right, so it's $13,000 for this trade. We're going to generate, 1880 in the in the trap, almost $1,900 using 13,345. That's a 14% return in the tail. That's a good return. We could actually get a little safer if we wanted to, and go down to about 3,900, and we'd still make more than 10% on this particular trade. 1,600, we could go even 3,800 on this thing, and go down even further here, and we're still making well over 10% in 45 days on this, which is a pretty good setup. So let's look at using this one right now. I'm going to take a picture. We got more trades coming, so hang tight, guys. All right, so this is what our 112C would look like using ES. We're going to see if we can create something similar in SPY for you guys as well. But I'm going to go ahead and place this trade not in that account. Okay. And then we'll see if we have to make some adjustments or fuss it, we can. And we don't have to, so we got filled. All right, so we're back in. So we closed one out for 3,200 today, and we added a new one back in. So this will be in good shape. All right, so now let's look to see if we did this in SPY. Now, bear in mind that these are portfolio margined accounts. Okay, so you got to keep that in mind. Let's do the same type of a trade. Now, we don't have the exact same expirations, but we're going to get close. So we're going to use 67 days here. And I think we did something like 3,800. I don't know, which was about 5 delta, but let's look at the 4,000 for starters. Well, maybe we can go here. Let's leave this alone for now. There's that. And then there's about 137 days. And do something along the lines of this and that. Okay, so here's the SPY version of this trade. Okay, so here's what the SPY version of this trade looks like. Same type of trade. So this is the SPY version, pretty much the same. You're getting a really good return on this right now. 376 in the tail, the 10 wide, which would be pretty similar. It's a pretty good looking trade. We could actually get on to 3,800, which would be, there's the 380 put. Something along these lines. Not too shabby. This thing still pays off really well. Buying power here. Let me take a look at this in a different account and see. Yeah, 20. So buying power is different because of the hedges. So let's just use this one as our example. Okay, so this is what the SPY version of that would look like. And if we're going to size it the same, this is pretty much what the same sizing would look like in SPY. And I'm posting these in the Discord so you guys can see exactly how they work. But essentially, these are the same trades. The SPY one is definitely using about the exact same, a little bit more buying power than ES, but only a little bit more right now. How does this change when volatility changes or when VIX drops? We'll have to take a look at it there. But again, it's not a bad setup in SPY either. So if you want to do this in SPY because you don't want to do ES and you're afraid of the span margin pieces and still owning this thing at 380, not bad. But you had to do 5 contracts. Okay, so you had 5 contracts on this thing. It's a little heavier. Okay. Um, but overall, not too bad. This is what this thing would look like in SPY. All right. Hopefully that helps. I know there were some questions on that before, and that answers those. All right, let's get back to positions. Why not do the NPS at a higher delta in SPY? You certainly can. I was trying to keep it like pretty similar. Uh, And right now, I think I'm a little more chicken, but I don't mind going out a little bit further out of the money because VIX is so high. It's at 35. I think you're getting paid pretty well to do that. So I think you can take advantage of that a bit here, still make really, really good money on it. All right, so there's ES. We're down only up 6, 7 points. So SPY or ES, whatever, is in danger of dropping negative on the day. All right, gold. Somebody was talking about a gold 112 trade or campaigning gold 112s. They don't always have the same expirations or as many expirations, so it might be a little more difficult to campaign it. You could do something similar. We'd have to do 72 days or 43. I don't love, I don't really love 72, but I don't love 43 100% either. But gold IV is really high, so we could, in fact, take a look at something around this 28. Let's just do 28.50. All right, and then let's look at this here and sell something along the lines of this. Well, it's not exactly set up right, but we'll fix it in a minute. Okay, so okay. Here's our 112 campaign trade in gold. All right, how does this stack up? Right now, it's kind of similar. Maybe we tighten these. 980. This is pretty similar right now if you wanted to do something in gold using GC. The 2800, how does that stack up for us? 2800 is a pretty good dip in gold if this is not a bad trade. Taking in $1,000 using 13,000. Okay, it's a 7% return in 43 days on the naked puts. Uh, it's pretty good. So that's a pretty good return. I don't know if this can work every single 2 weeks or something if that's what you wanted to do, but uh, we could do a 112c here. I think also on gold right now, with the setups being the way they are, you could actually look to do just a standard 112 in gold. Now this thing is the same, going to give you essentially the same return that you had. However, it's not the campaigning style with your put debit spread. So if you wanted to build a wall of put debit spreads out into the future, in case gold does reverse itself. Yeah, maybe it's not maybe it's not the worst. I don't mind this 112. It's just a standalone here either. 940 bucks on 13,694. Again, pretty close to 7%. And then if you drop into this trap and you have to break, you know, you're going to have to break the 21, the anchored VWAP. You're going to have to break that uptrend. You're going to have to break the 50, all to get down to this number down in here. You can even be a little more chicken if you want on these things and still make pretty good money. Even this 28.30, I'm still making 800 bucks on 12,788, still over 6% in 43 days. It's not a bad trade on it. I'd almost like to get 1,000 bucks on it. We cannot shrink. Okay, now we shrunk the trap a bit, so it's a very narrow trap. Okay, but a really fat tail. And again, the trap is not the key here. It still pays decently, 14.20 on 12,930. So the trap will pay about 11%, and the tail here pays 7%. So 12% here or 7% in 43 days. This is not a bad trade. I actually don't mind this trade right now, especially if the markets can't seem to hold up pretty well. Then I think this might be a decent trade. If you want a bigger trap, I think that's the only thing you want to take a look at is, do I want a bigger trap where I still make decent money, 800 bucks on 12,795. I still make a little over 6%, not 7%, but down here you make, 15 to 20% or 15% in the trap. I think you got to pick your poison, decide what you want to do. We could come back up a tad too. So let's stick with this piece here. This is not bad. I don't mind this trade too much right here. So that was our just want to screen capture this thing, and I'll share this trade for you guys if you want to take an eye out for it. So you could do a gold 112 in here. It actually sets up decently right now. You could potentially look to campaign it, but I don't know. I'll hold off for now, but we'll put an order in. We'll see if we get filled on it. And that's all I want to take a look at. A Jade Lizard or something would have also worked well. Okay, trading the flow. Yep, I didn't see your note. But yeah, what about a Jade Lizard on gold? Absolutely. Let's do the same 43 DTE type of a thing. What did we sell? We sold way down here. We may not want to go this far. We sold 28.40. Okay, we sold this thing. I'm going to use something similar. Then we're going to go. The problem is the 5 wide is your thing. Right now we're getting 5 wide at 43 days. If we're only getting 10 wide, this trade does not set up. But at 5 wide, it does. And GLD, we can take a look at that as well. I did look at that the other day. Problem with GLD is you don't have a lot of expirations. All right, so let's take a quick look. Here's this thing. We probably are going to have to pull these shorts up. Where are we at? I mean, they're probably way too low. Maybe 29.50, something like that. Okay, so here's a Jade Lizard. This, you have no risk to the upside. it's bouncing around right now. It's a little bit better return. I had to go a little bit higher to get that return on the puts, but I don't like this one at all. I just don't like the setup on it. You're gonna have to go up more, a lot higher here on the naked puts. I mean, I was 60 points lower on it. If you wanted to do something like GLD, here's my problem with GLD is you do have decent amount of strikes. Let's go this 41 DTE. This is a PM account again, so we could do something like 65 or something. And that may even be too low. I don't know, Ray, if you were looking at a 112 type of trade, because GLD has some of these narrower strikes, it's a hard to borrow, so it can cause you some potential problems. Let's go here, maybe. Here's this particular setup. It's not a perfect 112 or J Lizard or something, but you can see the buying power, because it's hard to borrow, is a little bit more tricky to work with. I'm not getting quite the return. 123 bucks on 5,300. It's only like 2%. We really have to start to move things around, maybe make this more narrow. We have to pull this up quite a bit. I just don't think GLD sets up quite as well with it. All right. We'll let this gold trade work. Gold, geez, it's dropped quite a bit. 970. Yeah, I'm gonna do a PMCC. Just hang tight. We're gonna knock something out in just a minute. All right, at 980 is where I want it. 970. Still 7%. So 970. Let's go. Let's try to get filled at 980. Gold being tough. All right. There we are. So one of the trades I wanted to take a look at today, and I wish we had done it when ES was down a little bit more, was I was actually going to look at also establishing, again, just nibbling in. I don't want to go hog wild and add a bunch of trades. I've added a new 112 back, but I closed one and added one. So I think that, to me, it's a wash. And I have not added any more real risk. If this gold trade goes through, I'll have added a little more risk, but it's gold. So we're going to look at Hood and we're going to look at QQQ. But in this account, I got SPY. QQQ is going to be very similar. But I'm going to talk about the Lazy Trader account. But let's take a look at QQQ. If I was going to do something in QQQ, boom, I would go out. If I'm going to do the poor man's covered call, right now I'm going to like the 430 day. I'm going to drop to about the 80 strike. They're expensive on this one, but I'm going to pay for the basically 355 strike, more give or take. I'm paying about 130 bucks. So 485, I'm paying about a $30 premium right now. It's fairly expensive on QQQ to do this, but $30 premium, we can erase that if we're selling like $5. It'll take us about 6 weeks to erase that. All righty. So if I was going to do QQQ, here's where I would be. I would probably I would take a look at this. Let's add one. Let's do one here. Somebody wants to see hood as well. We'll take a look. QQQ and SPY, so similar. So let's get out. So there's QQQ, what I would do. And if I was looking at doing, at 7 days out, if you're doing at the money, you're going to bring $10 in. I would probably not need to do quite as much. So here's the question for you, and what I wanted to really get at today is, let's again say we were going to sell, this 80 delta. I would be selling this for, let's call it $139, okay, which is going to cost me. I'm gonna not use the buying power here. I'm going to use the cash secured version. So let's just say this is going to cost $13,900 to put in. Okay, everybody with me so far? So $139. I'm using the cash secured version, not my portfolio margin. It's really only going to cost me $7,000, but I want to use the cash secured. Right? My goal is 3% a month. Right? So 3% a month on $13,900 means I need to generate $417 a month on this trade. Okay, 417. If I did that and I was doing 7 days out now, again, VIX is very elevated, maybe massively elevated. Okay, $417 means if I sold weeklies, all I would need to take in weekly would be like $100 a week. Okay, selling something way up here is like the 12 delta. Okay, if I did this, and assuming that QQQ never moves up, never moves lower by expiration, okay, but I sold $1 strikes every week, and I brought in $100. I'm going to bring in a little over, a little over $400 a month on my $13,000. Okay, so 400 a month on my 13,900, is going to be close to 3% a month. That's all I need. Okay, so you don't have to, you can give yourself a little bit of room, especially right now. I'm giving myself some room because VIX is so incredibly high. The other thing you can do is I could just put this on as a trade. If we think that the markets may be going higher, I could close the whole trade. I'm going to go back here. Let's just do this one. Let's do it and have some fun. Okay, we're going to add a QQQ. Poor man's covered call. Tweak this a bit. All right, so we got filled on this QQQ. All right, and in order for me to just make 3% a month, I just have to sell the dollar, but I'm going to go a little bit more than that here, and I'm actually going to just do the 3 days out. Okay, but I don't need to sell the at the money for this Friday, but I'm going to, because if we go up, I might just close this entire trade. But I'm going to sell. What were we up today? Bear with me. Yeah, if you sell 500 a week, you're gonna pay the whole thing off. I'm only talking about making my 3%, not paying the whole thing off. So the minimum I want to get is $1. But let's go with the 500 because that's what I've been doing on SPY, is trying to grab the 500. But I want to give myself a little room to go up, some points here today. So let's sell this one for about $500. I'm just going to walk it down a tad. Nope, didn't even have to. All right, so here's the deal right now on the QQQ. If by Friday we get to 460, it's possible I could just take this trade off and close it. I'm going to make $5 on the 100. So I'm going to make $500 on the leap by Friday. Well, $5 times 80. So I'm going to make $400. 80 is the delta. So I'm only going to make 80 cents on the dollar if I go up $5. But if I go up $5, the call will expire worthless, and I'm going to keep 530, and this will have gone up 400. I will make $900 this week, and I could let this thing expire and just close it out, take the win, and go home. All right, so there's the QQQ. I know we're about almost over time, but give me a second here. Let's get into the lazy trader, and we'll show you what we're doing in there. So somebody was asking me about Hood. So I made 3 trades today in the lazy trader account. Essentially, I was looking to do the wheel. So I sold 30 days out. I sold SPY, I sold Hood, and I sold QQQ. I'm happy to take assignment. Okay, if we drop to 40, I will take the assignment on Hood, and I will write covered calls against it. Probably at the money covered calls is what I will do on that. If I bought Hood, okay, in the PM account, it's only costing me $1,300 to do that. So if I could buy the shares, okay, cash secured, these shares are only going to cost me. All right, let me go back. If I get assigned 5 shares at 40, okay, it's going to cost me $200 times the 100, in shares. It's going to cost me $20,000 to do that. Okay, right? Because at $40, okay, that's $4,000 per contract, and I did 5 contracts, and I'm willing to take cash secured. I'm willing to take control of Hood at 40, and these 5 contracts won't cost me a whole lot buying power wise, but cash secured 20 grand, which is totally fine. And then if I was writing covered calls on it, roughly a week out at the money, I can probably bring in somewhere around, $1 to $2, depending on, if it's at the money, probably close right now because VIX is elevated, about $2 a contract times 5. So I'm bringing $1,000 a week on Hood if I take assignment. If you wanted to do the poor man's covered call on Hood, you don't have a lot of the expirations. You've either got the 340 or the 641. You could do either one. If I did the 340, I would probably be buying the 30 delta for $1,900. Okay, so on Hood, I'm going to take in $1,900, or I'm going to spend $1,900 for the 30 uh, Hood at 340 DTE. Okay, super simple. You can do this in a small account, and in fact, I did it in the small account today. I actually bought 2 shares of this in my small account on Hood. Right, so assume it's cash secured, $2,000. Okay, $2,000 is what I would sell, is what I would buy that for, and then I would I'd take in roughly $200. Okay, that's a pretty good deal. $200 on $2,000 is about 1% a week, 4% a month on Hood, and I think Hood is at a really good spot right now. Okay, especially being down a little bit today. But I went, instead of going the poor man's covered call route in the lazy trader, I sold the naked put. We do have Amazon, which is getting smoked again. I'm going to actually sell on Amazon. I have 3. I'm actually going to sell covered calls on this thing. I'm going to go out here. I'm going to give it a little bit of room for a move. It made a 4-point move down today. I waited until we did the Zoom to do this, which cost me some money because Amazon was not down this much earlier. But I'm going to write covered calls against my synthetic long. Okay. So I'll write covered calls against my Amazon synthetic long. I own Boeing shares, and I'm going to write a covered call against my Boeing shares, again, out of the money. My cost basis is on these is 170, so I don't want to write anything below my cost basis. Okay, we'll actually go just above it. Okay, and sell a covered call here because the markets may be rolling over a bit, so that'll give us a little bit of downside cushion if things roll over. And Nvidia, there's nothing to do. Palantir, nothing to do. I'm fine with all of these trades. QQQ, I did sell again a 30-day naked put today, looking to potentially get assigned at 430, and I will wheel that one. So again, I'm okay with the wheel on high quality names and the fact that we're at lows that are 15 to 20% off of the highs of the year. I think it's a little bit safer now to get in. And I did the same thing on SPY. I sold a 30-day naked put to potentially wheel. Okay, there's where we are. I think I covered everything with you guys today. So a couple trades that we got into, we have not gotten filled on the gold trade. If we don't, we don't. I'm not going to chase it. I have no idea where that gold right now. It's just below our cost. I mean, I could go to 975, which I think would be, oh, I'm going to leave it here. 975. If I go down to 975, I'll probably get filled on it at 9.7. I can't do 975 because it only works in 10-cent increments. I'm not going to 970, so I'm going to stick it to 980. I might have to drop it, but even at 970, 970 on 13,254 is still 7%. So I guess it's not bad. So I'll leave it there. Gold's moving even worse now. Uh, so there. We're going to leave it. I'm not going to chase this thing to the depths of wherever it may go. All right, there's where we are. ES is back up where we started the session today. We're already up on this. We've already closed out a winning naked put. We've got a new trade back on. We added this QQQ, poor man's covered call, as a good example for you. I'm fine with everything that we've got going right now. We have a ton of buying power left. I'm not going to jump all in today. Let's just let things ease up where they are. So hopefully this all makes sense. Thanks for sticking around today. We'll put this in the chat and we'll see you guys later. But also on the small account, I did do a MAGS poor man's covered call today. A little more difficult because you do need to get approval if you're a Tasty Trade to be able to sell covered calls on it. But I have that. So it's all good. We'll try MAGS as a smaller version of SPY and Hood. So we're going to do Hood and MAGS in the small accounts today. All right. We'll see you guys back in Discord. Bye-bye.